Hello, everybody, and welcome to another edition of the Richard Haynes Real Estate Show. I'm your host, Richard Haynes of Haynes Real Estate here in the South Bay area of Los Angeles, where we focus on the residential housing market on the Palos Verdes Peninsula, Redondo Beach, Hermosa Beach, and Manhattan Beach. You guys, it's October 8th. 2024. We are rolling into the holiday season, and with the start of October brings the end of the third quarter. I can't believe we're heading into the last 3 months of the year, but yes, we wrapped up the summer season here in the South Bay real estate market, and when we end that Q3 quarter, it means I've got some juicy quarter over quarter numbers for you real estate nerds. I know it's nice to hear about what's going on in the market, getting some perspective or opinions, but we always want to focus on the numbers because the numbers don't lie. So you want to pay attention to these items, which will guide us on the data. And then I'm going to wrap up the show with some additional thoughts on inventory levels and some anecdotal notes just so you can get a holistic view of the South Bay housing market around these quarterly numbers. So without further ado, let's get into the 2024 third quarter housing numbers here in the South Bay. Like we normally do, I'm going to kick things off with Manhattan Beach, our most expensive housing market with the exception of the very small Rolling Hills behind the gates neighborhood. We're going to kick things off here. Manhattan Beach, surprisingly, is down ever so slightly this Q3 compared to last year's Q3. Manhattan Beach is down 3.7%. What's interesting to note about Manhattan Beach is last year we were trending, and even previous quarters, we were trending to median home prices pushing $3 million or higher than $3 million. Unfortunately, Manhattan Beach took a step back and is sitting at a median price of $2.75 million for the third quarter. And what's interesting to note is that Q3 of last year is similar to Q2 and Q1 of last year. So that baseline number has stayed relatively the same. It's really us taking a step back on median price this year, with Manhattan Beach being down ever so slightly, 3.7%. Sales in Manhattan Beach, the number of transaction is slightly down, but it's essentially flat. So just for you guys to know, Manhattan Beach is down. In Q1 it was down, in Q2 it was up, and now we're down again in Q3. Going to be very interesting to see how those numbers shake out for full year data 3 months from now. Moving on to the Palos Verdes Peninsula. We're not going to include Rolling Hills behind the gates. It's just too small, too few transactions on a quarterly basis. We're going to cover PVE, RPV, and RHE. Let's kick it off with Palos Verdes Estates, and that city is up 17%, you guys. In 2023, last year, PVE took a big step back. It had an amazing surge in home price appreciation in 2021 and 2022. 2023 was a tougher year for the city. This year, it's made a big comeback on almost all the quarters we've reported on for you here. And again, reiterating that in Q3, up 17% to a 2.75 median priced home, which is on par or very close to Manhattan Beach. Rancho Palos Verdes, the largest home market on the hill, also the most affordable, is up 17.2%, so just slightly higher than PVE, up to a median price of $1.77 million. And for me, this is kind of a surprise because we've seen so many homes sell at major discounts in the landslide areas of RPV. To see home prices up 17% is awesome. But again, the baseline is low, just like PVE, where RPV also had a tough 2023. We have easier comps for home prices to rise. And when I've talked to people on certain Instagram reels or phone calls I get, I've told people the landslide area is a very small fraction of the overall RPV home market. So while we're getting much lower prices in the landslide areas, when you look at it from a median home price perspective on this large housing market of RPV, prices are up. When it comes to Rolling Hills Estates, up just under 5% at 4.9%. The median home price in Rolling Hills Estates comes in at $1.887 million. Nice, slow, and steady pace for Rolling Hills Estates, and nothing too crazy with more condos sales happening in the estates, but also we're starting to see a few more sales happen in Rolling Hills Country Club to balance out those two extremes of that market, and a 1.887 median price is about right for Rolling Hills Estates, and another good print. When we talk about sales, it's mixed on the Hill. PVE is down slightly, RPV is up nicely, and Rolling Hills Estates is down. I'm not going to get too much into sales numbers and make things confusing. We'll do a bigger sales deep dive at the end of the year to see how we compare to 2023, but sales are mixed throughout the Hill, but nothing major of note. Moving on to the small but mighty Hermosa Beach, and you guys have heard me as a broken record over and over again. Hermosa Beach has been slow and steady for essentially the last 4 years. There have been 1 or 2 quarters where we've seen a slight dip, but Hermosa Beach is up almost every quarter, just ever so slightly. And it's the same thing for Q3 2024. Hermosa Beach median price is up just under 4% at 3.9%, hitting a median price of $2.25 million. We have literally seen 2 to 6 or 7% increases nearly every quarter. Even during the scary times of the pandemic, Hermosa Beach prices hung in there and have just steadily creeped up over time. And that is no different for this quarter for you Hermosa Beach real estate fans. And as far as sales are up 9.3%, 47 sales this quarter versus 43 sales of last year's third quarter. And wrapping up the Q3 quarterly numbers, we're finishing with Redondo Beach. Now remember, I take some big data numbers. In the past, I used to take out Hollywood Riviera. It's a lot of work to get those sales out of there. So I want you to know these Redondo Beach numbers do include the PO Hollywood Riviera that says Redondo Beach, but it's actually the city of Torrance. But please note, I'm comparing that to last year, including Hollywood Riviera sales. So I'm hoping the bigger data smooths things out. So Q3 of this year, Redondo Beach, essentially flat, but it is up 1.7%. That's a great number. South Redondo's looking strong. North Redondo seemed to have a little bit of weakness last quarter, but overall, the entire city, the most affordable beach city, is up ever so slightly, which is great news as there's a lot of first-time home buyers, and this is a good market barometer of the health of the overall market, especially entry level, with North Redondo being such a big chunk of the data. As far as sales, they're also flat, just up a fraction of a percent, 0.6% up. So no red flags on Redondo Beach, nothing crazy material, just slightly up on both prices and sales, and that is a great sign for our local South Bay housing markets. Now, you guys, I've been talking about inventory. I've written about it on my blog, and I've talked about it here specifically on the podcast. I didn't print the inventory numbers or the active listings of homes for sale. And we're watching active listings and inventory because as inventory rises or supply rises, we're hoping that gives buyers more choices. Maybe prices don't run away from us and things get more affordable. But I did look at the inventory numbers. I eyeballed them, and essentially All of these markets, Manhattan Beach, the Palos Verdes Peninsula, Hermosa Beach, and Redondo Beach, we are seeing slowly rising inventory levels across the board. So yes, people are feeling that listings are starting to climb. Maybe they're sitting a little bit longer. Maybe there's some canceled listings. That is happening. And yes, inventory is up, but there aren't a lot of markets where inventory has really surged. We are still lower on inventory when it comes to a historical basis in some markets, and some are right in line with their 3 or 4 or 5 year inventory average. So there's nothing out of the ordinary. Sure, I did see, for instance, in Rancho Palos Verdes, we did start to see a stronger tick up on active sales or for sale houses, but it still is lower or in line with the last few years. So what I want you guys to know is that number one, yes, the inventory is rising. 2, it still is historically low or in line with inventory levels over the last few years. And there's only 1 or 2 markets that look like they're having a material jump higher. We're going to watch and see if those continue to go higher. And if areas that have stayed relatively flat follow suit, that could be an indicator of the market. But that's where inventory stands. But thankfully, interest rates are coming down, so hopefully there will be more buyers there to meet that inventory, and we do need more homes for sale. So it's not a bad thing if inventory rises. So to wrap up the show, you guys, I want to also share some anecdotal evidence, which revolves around that inventory, revolves around these median price numbers, is that a lot of buyers that I work with are starting to say, Richard, we're seeing more listings sit on the market. Richard, we feel like there's more options on the market. And of course, that has been supported by the data that I just shared with you all. So I want you to know, not only is the data not lying to us, but buyers here throughout the market have that sixth sense and are feeling those same numbers as well, which is a good thing. On the flip side, with listings, sellers are still pretty darn confident because they believe as interest rates fall, buyers are going to be able to afford more, and that's going to keep their all-time high prices stable, if not go higher. I support my sellers and their confidence, but I still almost always recommend to them to slightly underprice the comps, induce a bidding war, and that is the best way to sell because we are seeing people take their homes off the market a lot more than what we were seeing 1 or 2 years ago, and that is due to a failure in asking price. So while during the pandemic, you could ask whatever you wanted, you get multiple offers, break the next record price, or you could sit there and wait a few months and someone would eventually come to you. If you list higher than the comps, you are not going to sell your house. So you still need to have strategic pricing. And of course, I'm sharing my recent blog with sellers on, hey, history shows in California, lower interest rates don't always mean higher prices. There have been times in California history where interest rates have fallen and prices have fallen too. So don't fall into the trap of the misinformation that when interest rates fall, prices always go up. That's not entirely true. So anecdotally, you guys, to put a bow on that, buyers are feeling the inventory. They feel like they have more options, but they're also excited not just because they have more options, but because interest rates are coming down. On the flip side, we still have very confident sellers, but they have to be realistic sellers who are making sure they're pricing their home right to get an efficient sale that allows them to get market price or slightly higher. So you guys, that's the show. The quarterly numbers are actually really, really positive. I know we started off with a negative with Manhattan Beach down, but if you noticed, all the other cities on the quarterly report were up on median price, which is great. A few of them pretty strongly up, but a few slow and steady, which is exactly what we want to see. Inventory levels are slightly rising according to the data, and then we have both confident buyers and sellers. So for now, it feels like things were great in Q3. Hopefully we continue solid momentum in Q4. I will be back to you in the next couple weeks with another podcast. I appreciate you guys always listening in on the Richard Haynes Real Estate Show. Feel free to follow us on Instagram. Feel free to subscribe to my blog and click the like and subscribe here on YouTube. Now that we're posting these on YouTube, never be afraid to send in questions or topics, and we'll do our best to cover them. Take care, have a great week, and we'll see you next time.